morning. This is Business Morning. Thank you for joining us. I'm Chimeze Obi Iwa. We'll begin with a global oil market update. Prices moved higher this morning after an industry report showed that U.S. inventories of crude fell more than analysts had expected, bolstering hopes that fuel demand in the world's biggest economy can weather the pandemic. Brent crude was up 15 cents at $44.65 a barrel after falling around 1% on Tuesday. West Texas Intermediate oil was up 9 cents at $41.70 a barrel, having dropped 0.8% in the previous session. The American Petroleum Institute said on Tuesday that crude stocks fell by 4 million barrels last week, more than analysts' expectations of a 2.9 million barrels draw. Official government data, of course, is due later today. Still, growing uncertainty over a stalemate in Washington in talks for a stimulus package to support recovery from the deepest impact of the pandemic may weigh on prices looking ahead. And back here, industrial giant Bua Cement has continued its contribution to the fight against COVID-19 in the country with the donation of 3 new emergency response ambulances to the Delta State government to support its effort at curbing the spread of the pandemic. The handover of the ambulances by Bua Group's management, led by its head of corporate communications, Mr. Otega Ogara. The governor of Delta State, Dr. Ifeanyi commended the company for its support in combating the pandemic in the state while describing the donation as timely. Delta State is the third in the South and one of the several states across Nigeria to benefit from Bua Group's intervention against the impact of coronavirus in the country, while the group has so far committed over 7 billion naira in cash, foodstuff, medical supplies, and other donations for the cause.
But the chairman of the Bua Group has done quite a lot. He's been part of the group, the private sector group leading COVID, and they've done a lot in terms of providing palliative for people, in terms of providing equipment, in terms of providing other logistics. And beyond what he has done in support of that group, he has also deemed it necessary to bring us 3 fully kitted ambulances as a state. And as I did say, without us prompting him, I think it's a very good gesture. We are very happy as a state. And on behalf of the government and people of Delta State, I want to extend our special regards through you to him and to let him know that we appreciate this. And we believe that if Nigeria can continue to have more men like him, I'm sure that this country will be a much better place for us.
We know you've done a lot, but we believe that this will go in no small way in ensuring that the state can effectively, keep combating the virus. These 3 ambulances are part of the chairman's vision to support, where possible, various efforts and interventions across the country that need additional support. The chairman has also said, and I think when he spoke to you, he also mentioned that if at all there's any other way we could come in, is ready to support, is ready to give you his backing to ensure that we can get back on our feet as a people as quickly as possible. Your Excellency, sir, permit me to also say that Delta State is the 3rd South state that has benefited from this. So far, we've gone to a couple of states across the country, and we're also doing more. We believe that if we are in a position to help, it is our responsibility as a corporate citizen, as a decent Nigerian corporate citizen, to support wherever we can.
And the new Companies Allied Matters Bill 2020, recently signed into law by the President, is expected to enhance the ease of doing business in Nigeria. The new document has repealed and replaced the extant CAMA 1990 with key amendments that will remove some bottlenecks from the old act. The revised act will make Nigeria's business environment as competitive as its counterparts around the world. Well, joining me now to speak more on this is the Special Advisor to the President on Ease of Doing Business, Dr. Jumoke Oduwole. Thank you very much, Dr. Oduwole, for joining us on the program. All right, tell us about the journey to repeal this old KAMA law, what it took to replace it, and why it took so long to review. 30 years, that's a lot of time.
Well, the most important thing is that here we are now. Stakeholders have been trying to modernize the Act since 2004. A lot of people have given effort to this enterprise, but one thing or another, here we are. I can say that for the last 3 years, we've been working on this with the Corporate Affairs Commission, with the National Assembly, with a host of stakeholders, the Nigerian Bar Association Section of Business Law, NESG, even within government, the SEC, the Ministry of Justice, also the capital markets have been very active on this. There's something in it for everybody. We've pushed, of course, for small and medium-sized enterprises. So there are a lot of interventions to reduce costs, to ensure more transparency and better governance. There are also very sophisticated provisions that have really put our business climate where it should be globally.
So you'll have to talk to us about those sophisticated areas in this document. In what ways does the revised document specifically enhance the ease of doing business projections of the federal government?
Okay, let me start from the most innovative. I think one that people are probably most excited about is the fact that we now have a single member, single shareholder company. This is something that some other jurisdictions have gone ahead to do. Nigeria has thought it fit, because we're very entrepreneurial, we thought it fit that this is an innovation that this climate is ready for. So you can now incorporate a company by yourself. Another structural change in that regard is limited liability partnerships, limited partnerships. So you can have the benefits of a partnership also with the attractive elements of limited liability. So that's another thing. We've gone ahead to work on electronic meetings. So a lot of virtual meetings, virtual annual general meetings, once it's in the association, articles of association of the company. Very importantly, electronic transfer of shares. This speaks to netting provisions. We've been wanting a derivative market, debt derivative market here in Nigeria. So the SEC and the capital markets operators have been very excited about this. They really pushed hard for it, and we're glad that we were able to make it happen for them.
Now, how will this new KAMA laws improve Nigeria's next ranking in the ease of doing business?
Well, there are a number of provisions that take us to where we need to be. There are provisions for insolvency, rescue provisions. We hadn't had that before as a business climate. So if any business has to fail, there are provisions to make sure that the business can fail with dignity, not have creditors cannibalize the business. So this is protection for businesses. You also have more protection for minority interest in a business. You have a situation in a private company where a public company, where the chairman and the CEO cannot be the same person. The chair has to be a different person. So a number of other issues like that, speaking to better governance. You can't be on more than 5 public companies as a director anymore, so transparency there. But I think for SMEs, what is most important is that we reduce the regulatory burden. You don't have to have a company secretary. You don't have to have an auditor. They are now optional. You also don't have to have a declaration of compliance, which was formerly signed by a lawyer and attested to by a notary public. Now the promoters of a company can have a statement of declaration, a statement of compliance by themselves. So those are some of the initiatives and the innovations that we put in there specifically for ease of doing business. But I must say that it's a huge legislation, the largest we have in Nigeria. We have about 869 sections in the new KAMA 2020 and 15 schedules, as opposed to 613 sections in the previous 1990 KAMA. So this bill this act has a lot in it. And yeah, it's just getting there and start looking at how the business climate is going to be revolutionized, just as it happened in 1990.
So what is your projection for Nigeria's ranking on the ease of doing business?
Well, it's hard to say. This year, the global cutoff deadline was in April, so minimal impact on this year, but next year we'll see the traction. I think for us, while we do work on rankings and the perception index, it's important to note for Nigeria that we're actually most concerned about the impact that we deliver for particularly small and medium-sized enterprises, which remain the engine of the economy, contributing just under 50% of GDP and employing over 80% of labor. So while we do work very hard at increasing our rankings, and we've moved up 39 places over the last 3 years, and we've been twice recognized as top 10 performers globally, our number one priority is making sure that the actual impact felt by the business climate and the recognition that the private sector feel that their demands have been listened to, and the government as a whole, that's the National Assembly. I must commend the 8th National Assembly and the 9th National Assembly for really demonstrating continuity in government and just making sure that this bill did not have to start from ground zero. Commending several agencies, like I said, at the executive level, and of course, private sector. So this is a testament to Nigeria working together for Nigeria.
Now, part of the concerns of investors in the new CAMA law is in Section 275, where independent directors are expected to have more than 30% stake in a company before qualifying for the position. Why the jump from around 0.01% stake? That's in practice to 30%.
So these are things that come out of lessons from global best practice. So the entire act, when you see a jump like that, we also have a similar jump, saving cost this time in the amount for registering a charge to now 0.35%, which takes that regime down 65% of cost. What it is that we've looked at global best practice and we've looked at the Nigerian climate. We've learned from example, we've learned from where there were insufficient tightening in corporate governance, and we've learned from that. So now we're at par with the best legislations across the world, and we're not going to stop here. It's not going to take Nigeria another 30 years. We're going to keep abreast with global best practices. And when you speak to the legal community, they will tell you that these protection, these measures are going to ensure that corporate governance is better in Nigeria. Less insider trading, less abuse of directors' responsibilities and fiduciary duties. You saw just last week the Institute of Directors launching an ethics code. This is something that is topical globally, and these provisions in the CAMA 2020 will ensure that Nigeria's market will be at par with the rest of the world.
Now, as for the section 404 of the CAMA, where provision is made for the equal number of independent directors with audit committee members, how does that balance the agent-principal relationship concept of corporate governance?
Well, I mean, thankfully I'm a lawyer, because this is not actually an ease of doing business question, but thankfully I'm a lecturer. I'm a senior lecturer at University of Lagos, and I did happen to teach company law back in the day. So what it is that you're looking for a situation where the voices in the room can balance whatever insider dealing can be going on. There's a reason why there's more independent directors being brought in to balance out shareholders, to balance out management, to make sure that even in an audit committee, which is where you have issues of financial accountability and looking at the books, the records, the accounts of the business, those are the places where you need independence, where you need rigor in the discussions of the company, because it's not at the very high level that these issues, it's not at the AGM that the books will be looked into. So you want to have the right people in the room to ask the right questions and the less probability for collusion. So they will be more independent, there will be more accountability and independent voices in the room.
Then the Act also prohibits a person from being a director in more than 5 public companies. Does that permit an investor to further have holdings in more private companies?
Yes, of course, you can have holdings, but you wouldn't be a director. And we also have the provision where you have to declare your interests, so we can trace who is actually in control, who actually owns interests. So these are provisions that are put into the Act because of past experiences that we've seen in the market, we've seen situations where you trace money. Of course, it helps limit corruption. But apart from corruption, good governance, because you have situations where companies or individuals can hide behind the veil. So this kind of helps in the lifting of the veil. You can now trace who the actual beneficiaries are in every company. This helps to make sure that there's no layers, because company law can be very complex. People can have all sorts of special purpose vehicles, all sorts of companies offshore, all sorts of things to make sure that either they're dodging tax liability or they're not transparent with their business partners, or they're hiding secret profits. It could be a number of things. And these kinds of provisions will make sure that we minimize, we limit to the barest minimum such sharp practices in the Nigerian climate.
And we also see the introduction of statement of compliance in the Act. How significant is that clause?
Yeah, so what that does, I actually mentioned it earlier, it makes sure that a promoter can now basically issue a statement of just saying that I have complied with all the registration requirements. In the past, it had to be a declaration of compliance, which had to be prepared by a legal practitioner and attested to in the presence of a notary public. You can imagine the cost, the time associated with that. With a statement of compliance, a promoter, especially for SMEs, can simply make the statement and submit the statement of compliance. And then the onus is on, if anything happens later, then you're liable for falsifying your claims. But we're going to take the promoters at their word. And this is significant for small and medium-sized enterprises, not to have to bear those regulatory burdens of, at a very early stage, employing lawyers, employing accountants, employing tax, not to say that we're taking away business from professionals, because my legal colleagues would be upset with me in a second. But what it is that we're making work more sophisticated. So a lot of the bread and butter, very simplistic, a statement of, a declaration of compliance is really just a standard form, but private sector get charged for that. Here, statements of compliance, the private sector would have to make sure that they've met the requirements by themselves. And sometimes private sector do opt to still use professionals. It's actually optional now, but it can save costs, it can save time for private sector entrepreneurs that are more self-aware.
All right, Dr. Oduole, just before I let you go, the Act introduces limited liability partnership, which encourages startups. How will this part of the Act help your office in promoting the establishment of more startups, especially now that the COVID-19 pandemic is rattling the economy?
Yeah, so the entire regime is directed at making sure that from ideation, people are able to very quickly, if I wake up at 4 a.m. and I have an idea, by 9 a.m. I should be able to have registered a company. So the reservation of business name is now electronic. We did that some years ago. And also the registration process. Now with things like electronic signatures, with things like e-meetings, not needing to have auditors, not needing to have company secretaries, limited liability partnerships, which is a choice of a structure. So you can have a single member company, you can have a limited liability, a partnership with limited liability, you can have regular more than 2, 3, 4, however many members you choose to. So we're giving more options to businesses, we're giving more options to promoters, a variety of options. So you can choose to have a limited partnership, a limited liability partnership, a single member company, or a more traditional company with several shareholders. So what we're doing is we're opening up the space so that people can move the way that is most comfortable to them, and the legal regime supports that.
Well, thank you very much for your time, Dr. Oduole. We just hope that this new law would eventually bring more investment into the country and encourage startups to do their businesses here. Thank you very much for your time.
You're welcome.
Dr. Jumoke Oduole is a special advisor to the president on ease of doing business. We'll take a break, and when we come back, we look at the issue of climate change and what the country is doing in that area. Just stay with us. Climate change remains one of the biggest threats facing humanity today. The threat of climate change is evident in Nigeria through increases in temperature, variables, rainfall, flooding, drought, and desertification. Now, it has been reported that climate change might cost Nigeria billions of dollars. The Nigerian government has since March commenced the process to revise and update the National Climate Change Action Plan, called the Nationally Determined Contribution (NDC), which it submitted to the United Nations 5 years ago. However, it is not clear the extent to which the previous NDC was adequate, the extent to which the document has been implemented, and what the new NDC should contain, especially in the light of the ongoing coronavirus pandemic, which has hit the Nigerian economy very hard. All right, joining me now to talk about this is a UN scientist on climate change and the director of the Center for Climate Change and Development at the Alex Ekwueme Federal University, Ebonyi State, Professor Chukwumerije Okereke. Thank you very much, Professor, for joining us on the show.
Thank you for having me.
Right, tell us about this NDC. Why is it important for Nigeria?
Well, the NDC is important for Nigeria because it is the statement that Nigeria submits to the United Nations indicating what the country intends to do in order to tackle climate change and to build a low-carbon resilient economy. So this is the statement that Nigeria makes and says, in the next 5 years or 10 years, this is what I will do as a country to engage in addressing the challenge of climate change and building a resilient economy. But as you have indicated in your introduction, the challenge that we now have is that while Nigeria has made an ambitious commitment, we are not quite sure the extent to which the country has actually gone ahead to implement a number of the things that he has promised to do in the NDC.
So what are the major constraints and challenges against the implementation of this NDC you see there?
Well, one of the critical challenges is the lack of political will. I've always said that there are three key imperatives to driving a low-carbon economy in Nigeria and anywhere in the world. And this is born out of the research that I have done and working with several governments around the world, including in Rwanda, where I drafted the first National Green Growth Plan, and also my studies in Europe and other parts of the world. We need political will to really drive the commitment that we've made. We need to have a clear plan, that's the second P, and then we need to have the right people, the caliber of people who know what they are doing, people who understand the problem, people who can creatively link these climate change action with the need to spur a clean energy transition and build a climate resilient economy for this country. So we need the right political will, we need the right institutions and plan, and we need the right people. And somehow these three things are still lacking very much in Nigeria.
Well, you talked about the National Green Growth Plan, which you are advocating for. Tell us more about it and why is it important?
So you would know, for example, that the lack of sustainable energy or power is one of the fundamental challenges facing this country. Yet, at about 200 trillion cubic feet of gas reserve, Nigeria is actually one of the largest repositories of gas reserves in the world. And yet we flare about 17 billion cubic feet of meter of gas every year. And so what we need in Nigeria is to begin to connect our climate change action much more cleverly with solving our everyday perennial challenges, especially in the area of energy and transport. And so the Green Growth Plan, for example, can lay clear the strategies that is required to begin to convert some of the gas that is flared into fuel methanol for automotive, thermal, and power generation, thereby not only reducing the about 58 million metric tons of gas that is flared every year in Nigeria, but converting that into fuel that can be used to power our our industrial revolution in this country. And by the way, nearly 70% of Nigerian households still cook with three-piece wooden stove with animal dung and biomass and sawdust as the fuel. And yet we are exporting large volumes of gas to neighboring countries like Ghana and Senegal, and the population by percentage of people using LPG in Ghana, in Senegal, is much more than those using LPG gas in Nigeria. So we need all sorts of different clever policies to begin to deal with the issue of climate change, while also connecting that with our quest for sustainable economic transformation. And that is why I've been advocating that we need a clear green growth plan to help tackle the climate change problems in this country.
Now, in line with upward review of its NDC, the government plans to expand the scope of sovereign green bonds. What do you hope to see with this?
Well, one of the fundamental things that I'm pushing for, and I am grateful that I'm leading a national project looking to bring in more analytics, inject more insightful, rigorous analysis, but also public engagement in the revision of the Nigerian NDC. And one of the first things I would like to see is about process. I would like the Nigerian government to open up this revision process much more to general public and input from stakeholders. Look, climate change is of course technical in some ways, but the the people in Borno, the people in Adamawa, the people in Cross River, these are the people that will tell us all over Nigeria. These are the people that will tell us what and how they are suffering from climate change. By understanding more clearly the impact of climate change in our communities around, up and down this country, Nigeria will be in a better position to design a nationally determined contribution plan that is in tune with the wishes of the masses and the need of the country. And so I would like to see in this revision round a much more conscious, systematic attempt to engage the wider public in the revision of the NDC, as well as move away from guess estimates to using robust analytical data and models, which some of us have developed working with the United Nations to be able to lay a fundamental, scientifically robust plan to move this country forward and drive a green growth transition in this country.
Has hit the Nigerian economy very hard. Do you think there is still space and money for Nigeria to be tackling climate change given the impact of coronavirus on the country's economy?
Well, that's a very good question, and that's the point I've been making, that it's not one or the other.
Well, I guess we've lost Professor Chukwumerije there. Well, that's technology for you. Sometimes it happens like that. All right, let's take a quick crossover now to the equities market. I'm sure Temple is ready to give us all the details of the activities that happened yesterday. Temple.
Well, yes, Chimeze, yes, we saw a market that dipped again yesterday. Yesterday we lost some 58 basis points from the all-share index, and all the way from the 25,000 psychological position, we dipped to 24,000 and settled lower at 883.70 actually. Look at the equity capitalization. That also declined from our much celebrated 13 trillion naira to 12.98 trillion naira. But don't bother, don't get yourself too worked up. We're going to climb back to 13 trillion and of course 14 trillion much later. Look at the volume of transaction, talking about the level of activity in the market yesterday. Volume was up by some 17%, was positive. We got Access Bank contributing some massive transactions to what we saw in this space yesterday. In terms of the value of transactions, we climbed by some 73.6% yesterday, 73.6%, because again, this is 2.47 billion naira in terms of what we did yesterday compared to what we did on Monday, which was 1.something billion naira. But we got your deals in red because again, yesterday we were positive in this space, up by some 4,000 plus, at some 4,000 plus in terms of deals. But yesterday we did some 3,925 as opposed to 4,000 plus that we had recorded in the preceding trading session. Let's look at the stock, the sectoral performance. In terms of banking stocks, ETI was up yesterday. Wema Bank was also up. We got Zenith Bank up by some 30 basis points. GT Bank continues to rise. It's doing higher, way higher than 24 naira now. So for those that had actually bought at 17 naira, and if you've been losing, if you've been resting for so long, perhaps it's time for you to check if it's that time for you to take some profits. So generally, we saw the banking stocks yesterday up by some 52 basis points, and of course, consumer goods segment of the market was up by some 93 basis points as things were yesterday. We rose basically industrial goods side of the market pulled down the market yesterday. 409 basis points decline in Dangote cement, and that's not something to actually celebrate. We will get an analyst to speak to us about that, what exactly is happening in that space much later on the program. Let's get back to Chimeze now.
All right, Temple. Well, Professor Chukwumerije is back. He was trying to answer an important aspect of this question. Thank you very much for sticking on there, Professor Chukwumerije Okereke. Well, that's what technology can do sometimes. But you were trying to talk about if Nigeria still has the capability of chasing this climate change in terms of the resources. Yeah, Professor Chukwumerije, are you there? Well, it's not looking good this morning, incidentally. Anyway, Temple, you're still there telling us about what happened yesterday.
Yes, I am here. I'm not going to fail you, Chimeze. Let's listen to what we have in the industrial goods space. Yesterday, we saw how Dangote Cement pulled down the market. It lost some 4.09% in terms of the transaction we saw. We understood that there was more of cross-dealing yesterday, and much of those cross-dealing on Dangote Cement were actually on the offer side of the bargain. We know that year-to-date, Dangote had fallen to some 0.14%. Yesterday, that's expanded further to some 0.42% in terms of the year-to-date losses. WAPCO was also down yesterday, and negatively, they both impacted this space, which is the sectoral side of industrial goods in the market. Prestige Assurance saw a decline of 10% yesterday and impacted on the sector, which settled lower at 2.48% eventually. Oil and gas, we got Adover PLC that was up yesterday by some 4.94%. We saw almost 1 million units of shares actually traded in this space yesterday. Cornwell, nothing to celebrate there. A lot of other stocks that you have in the energy space, not so much of celebration in this space. Folks are really waiting and watching to see what happens to the economy as everyone keeps their eyes fixed on the Q2 or H1 numbers for the economy, and of course Q2 numbers, which the NBS should be releasing soon before they take their decision. And of course, low valuations, which they have been checking out lately, has actually given opportunity to a whole lot of investors. They did buy on the low valuations, and last week we know that there was a lot of bullish sentiment in the market due to those bargain huntings. But this week we're seeing more of profit taking in the market. That's the reason why we're seeing some of those companies that had actually gained last week now dipping. And for those like Adover PLC that actually were lower last week and no deal, no activities at all, we're seeing investors coming on board. We have a stockbroker from TRW Securities, and of course a stockbroking firm now joining us. That's Mr. Abdurrashid Momo. Talk to us, Mr. Momo, about why we're seeing this level of decline and cold shoulder in the industrial goods space. Yesterday we saw Boa Cement dipping. The day before yesterday, Boa Cement dipped. And of course, yesterday it was the attention was shifted to Dangote Cement. Why the decline in that space?
Basically, if you are analyzing the market, you have to look at the heartbeat of the market, which is the index. Last week, I did write a report that the market was moving in an upward channel, and basically, I said the market was going to hit at least about 25,500 points. That is within the period of June. Those were the June highs before markets turned down to about 24,000 points. For me, the bull rally is still intact, but that channel cannot be broken now until it hits about 25,000 points. So what you are seeing basically are just corrections. There's no threat to the current bull rally till date. And stocks that can do such damage are the high network stocks like Dangote Cement, like Boa, Nestle, and the rest. If you see from the banking sector, last week we saw the rise of Zenith shares. Zenith now came down. Now the return of GTB. It's all just about market, just to balance up everything. But what I need to say that the market is still in a bull trend. The channel has not been broken. It has not been threatened. The market is moving in a staircase for, formation, going high. Then the correction is more like a landing to rest and see what goes next. But I didn't expect anything much bullish, but it's just going to be sequels of bull rallies.
GT Bank, and of course, which is where we've seen attention lately, and of course, Zenith Bank is also seemingly enjoying that level of sentiment at this point. But we haven't seen the earnings of these key companies. What do you think is delaying their numbers?
Well, we have to. I think that will be the next. That will be the trigger button for the market when these financials come out. But so far, if you look at it, despite all the COVID issues and everything, the market has actually been, the financials of companies coming out, they've actually tried. We didn't expect such positive, because we're expecting that from Q2 we'll begin to see the impact of the COVID, but the company seems to be doing well. So basically, we were waiting for what's going to happen. Those are going to be the key. Zenith, GTB, UBA assets. From there, that will now give us actually a true reflection of the market. If this current rally is actually a true, or we call it dip or a break, either the market is going to go up continuously or we're going to come down. But what you have to know is that the season we are in the market now, if you check out historically, the best seasons in the market actually from November to about June. Right? Where there's this thing of selling May and go away. But June is always the peak of the market. Most of the period we have seen is supposed to be more of corrections into the period of November when we start seeing actual bull rallies. But because of this special case of the COVID, people are actually waiting to see what the big boys are going to.
Games in the market, basically.
Yes.
All right, Mr. Abdulrashid Momo, thank you so much for sharing your thoughts with us about equities markets today. We appreciate your time. Mr. Abdulrashid Momo is a stockbroker with CRW Stockbrokers. Before we wrap up this segment, let's quickly look at what the NASDOTC has in stock. Was up yesterday, 0.70%. And of course, we got the market capitalization clawing back some gains. Moved all the way from 518 billion naira back up to 522.28 billion naira. Look at what we saw in terms of deals. Was up by some 63% yesterday, thanks to Niger Delta Exploration Production Company, which made some key gains yesterday. It opened at 275 naira, and of course closed higher at 295 naira. I think it added some 20 naira to the share price, and we saw some 42 million units or 42,000 units of its shares, added to what we have here. 42,000. If you take that out of the 53,000, you have a few more thousands left there, and of course that went to some other retail deals that we saw in the market. Again, this is one space to watch because again we know that Allianz Nigeria Insurance is one company that is trying to actually get delisted from the NASD OTC. Folks are actually concerned about that because they're offering shareholders 1 naira 50 kobo, but shareholders are saying, no, we want 2 naira 50 kobo. Let's continue to keep tab on this particular development at the NASD OTC. Chimaze.
If I'm a shareholder, of course, I want 2 naira 50 kobo temple.
I know that.
All right, we go on a short break, and when we come back, we do an opening call to London. And of course, back here to the debt and currency market. Just stay with us. And it's time to get updates from the street of London. Juliana is standing by to give us all the details. Well, good morning, Juliana. Finally, as expected, UK falls into deepest recession in a decade. 20.4% slump, worse than US and Germany. But is there any silver lining out there?
Good morning, Chimise. Well, I've got to say, if you are waking up in Britain today, there's no talk of a silver lining, more about a talk of a reality, because as you said, 20.4%, and that's the deepest recession that Britain has had in its history. It's the deepest recession on record, and it does follow a 2.2% contraction in Q1. I've got to say that these figures are quite staggering. Of course, we know we do business. There are always lots of discussions about statistics and numbers, but when you're actually looking at GDP, this gives you the strongest, most forensic look at how an economy is doing. And we can see that the British economy is literally imploded. It is the worst out of all G7 nations. I believe Spain are the only G7 or developed nation that have had a worse quarter than we have here in Britain. Amongst all the services, whether it's manufacturing, construction, the social services that Britain heavily rely on, we have seen a major impact. And of course, this has got much to do with what's happened with the government restrictions. There have been several speculations about just how Britain is likely to recover. You spoke about that silver line. I suppose the only silver line we have is there has been a slight bounce back. June saw a slight bounce back of 8.7%. But is it really enough? How long is this recession going to last? There are some economists that believe in Q3. I believe Howard Archer of the EY Item Club, he actually predicts in Q3 that the UK GDP could potentially bounce back by 12%. But I've got to tell you, people are just not out. And one of the reasons why people are speculating that Britain has performed so badly, and let's not forget, we haven't just performed badly in terms of GDP, we've also performed badly in terms of death rates. And everybody is talking about the fact that we went late into lockdown, we've come back late out of lockdown. A lot of British people are pretty comfortable working from home, and it's going to be really difficult for the Chancellor Rishi Sunak and the Prime Minister Boris Johnson to try and change the discussion in this country, trying to get people out and about. And the only way you can get people, out and about is if they feel it's safe. And it clearly isn't safe, because there were some restrictions that were supposed to be eased, I believe, about 10 days ago. They've been put on hold. So the question now is just what is the future of this country, and how long is this recession going to last? Pretty big story here, and it's breaking news across the world.
The Chancellor says he has warned that the UK faces difficult choices after plunging so deeply into recession. What difficult choices would UK have to make now to set things right?
Well, there are many, and I believe that's probably above my pay grade. I don't have that crystal ball. But Rishi Sunak, the Chancellor, as you said, he has been speaking. I believe it was an exclusive interview he gave to Sky News, a British broadcaster, earlier this morning. He did say that I've said before that hard times were ahead, and today's figures confirm that hard times are here. Hundreds of thousands of people have already lost their jobs, and sadly, in the coming months, many more will. But while there are difficult choices to be made ahead, we will get through this, and I can assure people that nobody will be left without hope or opportunity. I believe, there's been a lot of grandstanding. The Conservative government run under British Prime Minister Boris Johnson has been great with sloganism. It's been great with tackling people at the dispatch box when he sits in the House of Commons. But the reality is 730,000 people in Britain have lost their jobs since lockdown. There are talks of a second wave being here. We haven't got through the first wave. It's very cold here in Britain. We've got autumn coming. There are concerns about whether or not the NHS are going to be able to handle the pandemic. There is a term in this country at the moment which is called a staycation. Millions of people have decided not to travel, not to go on holiday. What are they doing? They're flocking to the beaches. They're flocking to pretty nature areas where they feel that they can get their time away from lockdown. But another issue we have is that when people are gathering en masse like this, the rise in infection is pretty telling. So I believe now what the British government are going to have to face is trying to strike a difficult balance. That difficult balance being the economy has shrunk by more than a quarter. It's doing worse than its G7 counterparts. The only way it can get better is if people are out. But because there is no vaccine, if people are out, there is an increased infection. So, the Chancellor has been praised for the way he's been able to handle this scheme. There have been tens of schemes. He's spent up to £300 billion of taxpayers' money trying to get people out of this coronavirus pandemic. And there are questions as to say whether or not it was worth it. Was it worth the lockdown, considering it's done so much of a damaging effect to the economy? And again, I have to stress, Chimaze, that, these aren't statistics. These are real lives. And this is happening to an economy, whereas unlike other G7 nations, we have Brexit at the end of the year. And we all know some of the fears, including fears from from Conservative MPs themselves, of how much of an impact that will be on the economy. So tough times ahead. But I suppose for the government right now, they'll be very, very happy that they're in recess. There is no kind of back and forth between the opposition and the governing party at the moment, because everybody's on their summer holiday. But again, I must emphasise that these are really quite startling statistics, the worst Q2 GDP fall in British history.
I can imagine. So, are the markets edgy this morning, or investors have already priced in the gloomy data already?
Well, you're right there. The investors have already priced in the gloomy details. There's going to be a lot to chew over the next coming days. But surprise, surprise, the FTSE All-Share actually opened up pretty well this morning, up by about 10 to 20 points. There doesn't seem to be any major moves on the foreign exchange market. The pound is holding steady against the dollar and against the euro. But, as it all comes in, I suppose there will be changes. It'll be interesting to see what Prime Minister Boris Johnson has to say, as well as the Shadow Chancellor, Annalise Dodds. And then, of course, we'll have those numbers at intraday, Chimmy.
Absolutely. We can't wait to get those details. Thank you. All right, back here. Well, Temple, a quick one for you there.
Well, we've seen the UK numbers now, 20.4% decline. I mean, that's a serious one, the deepest since 2009, and of course, taking the market back to the size of 2003. We'll wait for what happens to Nigeria, but our CBN governors are assured that we're not going to see so much of depression that's way in this country, because again, we've pushed out a lot of stimulus packages to cushion the effects of such. Let's get back to the debt and currency market. The numbers are more of money to us here. 2050 paper was of interest to a lot of investors yesterday, in spite of the fact that the market opened with so much widespread in the system. Folks placed attention on the 2035 paper and, of course, the 2050 paper. Here we got some kind of 10 basis points reduction in the yields yesterday, eventually. And now we know that the August 2020 auction for bonds, the calendar is out. 150 billion naira is going to be offered. That's next week, Wednesday. But let's look at the T-bills. No trading here yesterday. Nothing for investors to actually cherry pick on. But of course, on the OMO side of things as well, we've been seeing very, very reduced volume on this side of the market. We have Ifeoma Onyejekwe, a fixed income dealer with UBA, joining us via phone now. Ifeoma, we know that there's going to be some maturities and, of course, NTB auction today. What does that mean for the market, and how will it change the liquidity condition of the debt and capital market today?
Good morning. Thank you, Temple. Thank you for having me. So this week, retail customers have been the most visible in the T-bills trading sessions, while institutional investors have reacted with apathy during trading sessions, encouraged by reduced funding pressures, while looking forward to also increase their liquidity for the Treasury bills maturities coming in tomorrow. 56.78 billion of NTB bills and 87.97 billion of OMO bills will come in tomorrow, making a total of 144.75 billion now. For the final auction taking place today, top rates are expected to minimally decline to 1.2, 1.35 and 3.25%. From 1.2, 1.5 and 3.4% for the 91, 182 and 364 day bills. There will also likely be an OMO auction conducted tomorrow on account of the maturities coming in, and it will be the first OMO auction issued by the central bank since the 2nd of July. It will just take place tomorrow. For the bond side, we've experienced sluggish trading sessions with few bullish reactions concentrated on the auction bonds. Auction bonds, which are the 2026, 2035, 2045 and 2050 bonds. The long tenor bonds started off the week trading around 10.15 and 10.3% levels, but swiftly dropped to sub 10% levels after investor interest increased on the bonds. In same vein, Reduction in stock rates are expected during next week's bond auction on the 19th of July to 5.8, 9.35, 9.55, and 9.7% from 6%, 9.5%, 9.8%, and 9.95% for the 2026, 2035, 2045, and 2050 bonds on offer for a total of 150 billion naira.
Nice. Thank you so much, Ifeoma Oyejekwe, for that wonderful and awesome report. We do appreciate it. Ifeoma Oyejekwe is a fixed income dealer with United Bank of Africa. Thanks so much for your time. And of course, Chimeze, is back to you.
So much data to chew there. Well, let's hope we have a profitable trading day. Well, for those traders, and of course for us here at Temple. Yeah. Well, it's on that note that we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwago.